Hey, what's up everyone? In this video, I'm going to be showing you guys my Elliott Wave analysis on Bitcoin, and we're going to start off by looking at the macro time frame structures and see where we're currently sitting at. Then I'll be sharing my thoughts on the lower time frame so that we can further validate these macro structures. Now, I took the time to really dive into many different scenarios, and I've still pretty much come to the conclusion that we're still working in the idea of a primary wave 4 degree in the yellow circle, as you can see. Whether this wave 4 is concluding now or at a later stage at these lower levels is still up for a toss based on the Fibonacci levels until the shorter time frames resolve. But nevertheless, we did hit a very interesting zone, and I have a few pieces of evidence that I'll provide in the shorter time frame analysis based on just this Fibonacci analysis alone. So this idea just seems to be fitting best on the macro because of the overall symmetry, which is one of the very important component pieces of the Elliott Wave Theory when talking about the right look. And the right look refers to the proper visual appearance of these wave patterns that adhere to the minimum rules and guidelines provided by the Elliott Wave Theory. So this concept is essential because it helps us to ensure that we're currently identifying and interpreting the market movement trends of the primary trend that you're working in. And in this case, we're working for a possible primary wave 5 to be completed. So the right look all takes into consideration a proportionality where many of the waves should be proportional to help reduce any subjectivity. So for example, if in an impulse wave, wave 3 should not be the shortest compared to wave 1 and 5, and the corrective waves of wave 2 and 4 should show a reasonable balance in terms of time and price. Now, these don't have to be obeyed entirely because market inefficiencies do exist, and that's where guidelines start to come in to help build up your thesis on the bullish or bearish thesis, where we also could have a larger wave 1 against a wave 3 or a wave 5 that is going to be larger against this wave 3. We just simply do not know until it actually happens. But what's important is that they can still be valid even if those major rules and guidelines start to shift into a different territory. And that is where the most of the subjectivity arises between traders. But for now, since we have a pretty good overall look for a wave 1, 2, 3, 4, we should assume that a primary wave 5 is on the way. Then we have the idea of what's known as alternation for waves 2 and 4, which we're currently trying to achieve as we speak. But that's still not going to be achievable until it actually happens in hindsight. So then we have the idea of the Fibonacci levels, which means that we should try to achieve some degree of equality within these corrective or motive waves, but more specifically the corrective waves and how far they retrace into such as the golden Fibonacci zone or not. Now, there are also other factors such as time duration and degree consistency, which just means that if the wave counts are still valid, you should do your due diligence on whether the relative size or magnitude is consistent to the overall look of the structure. But I think that's a little bit too far into depth of how it should look. If it just has an odd looking or really long looking wave 4 against a wave 2, for example, then you know that you're probably working in a different structure of some sort. So all of these combination of factors helps us identify the overall wave pattern, which then increases the reliability of the market forecast. So it's a visual and interpretive skill that improves with experience and practice of the traders utilizing the Elliott Wave Theory. So with that being said, our current larger degree wave 4 is going to be the biggest discussion here for today's topic and how it will conclude, whether the correction is finished now or at a later stage, because we have achieved a relatively nice looking wave 4 on the macro that takes into consideration of all the factors I just mentioned in order to achieve a relatively good look without too much subjectivity. So if we're working in this primary wave 4 in the yellow circle, it means that we are more or less coming to some kind of resolution or conclusion for our intermediate wave C in this orange, as you can see. The reason why is because we have our wave A concluded, and we're now looking for this partner leg of this wave C to at least have some kind of equality, and that is what we're trying to achieve, like I have said on those factors. And if we do look at the equality of wave A against this wave C, we have achieved that 1-to-1 or the 100% of wave A against this wave C, which then achieves us that 1-to-1 ratio that we are looking for as a minimum expectation for a larger ABC to be completed here for a wave 4. Now, again, of course, we can just roll over, and that we have also other guidelines in terms of where the Fibonacci is going to be giving us some kind of cushion. But for the time being, we did hit a minimum expectation of that 382 Fibonacci level from this termination of wave 2 to this and termination of wave 3. So that is the most important levels that we're going to be looking at, this level here or this level here. But my evidence pertains to the shorter time frame analysis, which means that we do have a possibility of a bottoming structure, and let's discuss why. Now, zooming right back into the shorter time frames, I don't want to present 50 million different scenarios here, ladies and gentlemen, and then eventually just picking one that is deemed correct. So I've narrowed it down to just one possible scenario for the time being, but with at least a good possible or best look for the time being, because we do have the idea of some kind of wave C being in a resolution stage, which means that we're looking for 5 waves into a possible wave C conclusion. Now, like I said, on the macro is what matters because we did hit the 0.382 Fibonacci level. And then again, we also hit based on utilizing the trend-based Fibonacci extension tool that we hit a 1-to-1 equality, and this is the zone of interest that we're going to be looking at. But the major important factor that I want to talk about here that many really don't talk about is the idea of utilizing RSI divergences. Now, the RSI divergences, for the many of you that don't know, when you have a bullish divergence, you create a lower low on the price action and a higher low on or a lower high on the RSI oscillation. And when you have that between two bodied candles, it means that there is a possibility of some kind of price reaction to occur with high probability. They don't always occur, but I would say 90% plus of the time, you will see some kind of reaction. And I think we're again that beginning stage of a reaction right now that we're seeing. So what that means is, what's very important for this scenario is that let's forget all of these and how these termination points have happened. We can label this as a flat. We can label this overall as a zigzag. But what's most important is how the C wave is being resolved. To me personally, I think we have some kind of open or leading expanding diagonal going into a wave 1. Then we can kind of give us a little bit of room for a corrective wave 2 being built here, and then a 5-wave move into a wave 3, textbook wave 4, and then we are looking for a 5th wave that looked like an impulse, and then that is what completed our wave 5. So that is why we have a 5-wave completion to the downside, and most notably this RSI divergence. Now, why is this very important? Because even if you're not versed in technical analysis, RSI divergence in general, they have a higher chance of a reversal or a pivotal point at the very least, right? And if that's the case, within most of the time, I would say 80% plus of the time, within a 5th wave, when you have some kind of divergence being really confirmed between waves 3 and 5, that usually concludes a very high possibility of a wave C being concluded. So that is something that many do not talk about because they don't know how to utilize the Elliott Wave Theory between also using the RSI divergence. So that is a very, very important piece of evidence that we should be talking about. That's why when we label this last move as a 5-wave move and we have a divergence between waves 3 and 5, there is a very good chance that this could be a reversal pattern being in the making. On top of that, we talked about the 382, which is a very absolute minimum expectation against the 0.236, but the 38.2% is more of a high probability of a reversal, in my opinion, against a 23.6% of a reversal where it lies up in this region here, which we didn't get. So with that being said, we can always go down to lower levels, but for now, the main piece of evidence for this to be a pivotal zone is going to be the RSI divergence between waves 3 and 5, which then gives us that completion of an ABC or WXY, whatever you want to call it at this stage. It doesn't really matter because the larger macro structure looks like as a characteristic of a wave 4 being complete for the first area of interest of a pivotal zone. And that is what we're going to be looking for. And my main interest is based on this RSI divergence alone. Now we can, on the shorter macro or micro timeframes, kind of pivot back and forth here. As you can see, in my opinion, I think we're kind of overlapping in the beginning structures of a possible leading diagonal going into a wave 1, the leading contracting diagonal, and then we should be more or less retracing back into some of these major Fibonacci's, 382, 682, but most notably possibly the 682 just to achieve a good look or something or so. And then we can go up into a wave 3, 4, 5, into a larger wave 1. Then we can say that we're starting to create the beginning outlook of breaking not only out of this region here, but working on that larger primary wave 5 that I've discussed on the macro degree. So that is what we're looking for in terms of the overall primary trend degree. So this is why we have to create that narrative instead of creating 15,000 different scenarios and say what is going to be happening, although that is interesting to talk about. But I think just keeping things simple and simplifying the process is going to be the actual main thing that we should be focusing on, because overall this still looks like a 3-wave structure. Now this can develop into a possible wave 1 2, and then this becoming a 3, 4, 5 into the beginning of a first actionary wave of a larger wave 1 into a bear market territory. But for now, since we do have the ideas of equality, like I have said, that's number 1. Number 2, we do have a relatively good-looking wave 3, 4 against this wave 2 that we had over here. And that is going to be creating the overall sensible idea or approach to how we are going to be working for the primary trend against the overall bearish structures, where we're saying that this could be an A, B, C, and this is the beginning of a 1, 2, 3, 4, 5 to the downside. So it's really just up to you as a trader how you are going to be interpreting these things. But for me, I still like to think that we're still in a wave 4. But for now, we are getting a little bit closer in terms of a resolution in terms of whether we're really transitioning into a bear market, because we can always talk about the transitional move into a bear market at a later stage. But for the time being, since we do have an interesting Elliott wave pattern being built here as an ABC, whether you want to see this as a zigzag or a flat, speaking of which, this B wave did hit the 90%. This has to be labeled as a flat, but it can also be technically a B wave, higher B wave. That doesn't have to be. You can label this as a leading diagonal going into wave A, having this as a high wave B, and then having this as a wave C. In fact, that could be the preferred scenario in this case, because it could still give us that achievable zigzag that goes down into that territory, and we can still label as a zigzag ABC instead of having it as an obscure looking wave of a regular flat idea. So this idea, to me, having this as the ABC, our first area of interest has been met in the terms of a normal ABC being completed for this wave 4. This termination of wave 4, we originally had this over here, but since this level broke here, we are now just resorting to shifting that wave 4 into this zone over here, because we do now have a pretty good completed wave 5 to the downside for a wave C, and then we have that divergence. Now again, zooming in even further, it does look like some kind of leading contracting diagonal. I haven't done the main counts for this on the micro time frame. So we have 3 wave move here, 3 wave here, 3 wave into wave 3, 3 wave here, 3 wave into a wave 5. It seems like this seems like it is going to be some kind of leading contracting diagonal going into wave 1, and then we should be looking for, we're already in the beginning stage of some kind of actionary wave being built for this wave A. B, C, we should see at least retrace into the 618 or the 382, maybe into the 50%, which is not a golden Fibonacci zone. But we'll see. We'll see how this micro time frame plays out. But what we're going to be focusing on, and what primarily going forward, what's most important is, are we going to be creating a wave 3 after this? Because we have had so many opportunities to create some kind of wave 3 to the upside. When we originally thought this was the flat that was completed, this was a 1, 2, 3, and then this was the 4, 5. We originally even thought this was a wave 1, and then we were going to see this happening. That didn't happen. So this is why it's very, very confusing in this current range. Even I'm I'm still skeptical right now, even if this is a completed ABC. But again, the major importance of this video is creating a divergence between waves 3 and 5, between the bodied candles, that is. But the Elliott Wave Theory, it still remains to this idea that this is a 5-wave move idea to the downside that's complete. Alternatively, we could have this labeled as the B wave depending on our termination point, because on a few exchanges, it didn't hit the 90%. It actually went above this zone right here. So depending on which exchange you are in, you can label this wave B here. But for me, I like to label the B wave terminated here because it kind of just helps with the separation of our impulsive wave here. But you can alternatively label this possibly as a wave 1, 2. On this chart specifically, it would be a 1, 2, 3, 4, 5. But the problem is that this move here, I would have to convince me that you are able to count a 3-wave move into here. And I haven't seen anyone do this yet or have a reliable count. Neither can I. So that means I'm going to put our pivotal point of a wave B here as a termination point, have this as a WXY, or have a 1, 2, 3, 4, 5 into a wave A, have B as a triangle, and then C wave into that would be a long wave A, B, and then short wave C. We've seen that happen in the past as well. But in terms of the separation, this seems like the best way to label the impulse move to the downside. And we're now possibly working for the upside. Now, another important factor is that we have to have these lows saved, ladies and gentlemen. We cannot really go any further down. Otherwise, I think that there will be no in-betweens. I think we'll just go down to the 1.618 of this ratio of this partner leg of wave A so that we can extend our wave C even further. So this is going to be a very important pivotal zone, ladies and gentlemen. We'll see how the bulls step up into this game. But for the time being, I think that this is a very interesting zone for a pivot. If in the case that we did create a protected low, if this is the bottom, then we're going to be looking for the upside. So I'll have another Bitcoin analysis for you guys going into the weekend, most likely. I'll make sure to sacrifice some of my time to create more videos for you guys. But we've been on a roll. We hit 5,000 subscribers, ladies and gentlemen. Congratulations. Congratulations to me. Congratulations to you guys, because you guys are getting a lot more analysis. It motivates me to create more videos. Also, if you're not in my XForce Discord membership, please do inquire about it. You can contact me with the link in the description below. If you're not following me on X, please do follow me there at XForceGlobal. I do a lot of my daily analysis and updates there as well. So thank you very much. And please, if you haven't already, please do make sure to subscribe to the channel and also like the video. I'll see you guys in the next video. Thank you very much. Have a fantastic weekend. Bye-bye.